What is going on? Welcome back to Trending Stocks. Today I want to talk to you about Virgin Galactic, ticker is SPCE. Unfortunately, I was unable to stream the actual earnings, but since my last video, there was the earnings, so I want to give you a vague update as far as that, but more specifically, I want to talk on the data points and potentially from here, what the technicals are pointing to as far as where it might be going. So I'm going to go over all the stuff you need to know. Make sure you guys hit that thumbs up and subscribe. I always greatly appreciate that. And without further ado, let's get right to it. So when it comes down to the earnings, you wouldn't even know if you were looking on the chart, you'd actually just assume it was just a volatile day. But in fact, it was a very volatile time period, as you can see. So the following day caused a little bit more of a tentative sell-off. This in general, though, was a scary time period because it actually did break it below all the pivotal moving averages. But the next day and the following day as well, so even on Friday, it was up 7%. So it bounced back very, very well. Data points, I think it was to be expected. Revenue up roughly about 516% year over year. A lot of this stuff, very much known stuff. So I'm not going to go into that too well. There was an article by 𝗪𝗧𝗡𝗪. So once again, 𝗪𝗧𝗡𝗪, you have to kind of take that with a grain of salt. But this kind of laid it out in a interesting perspective that I've never heard before. So two different variations, one of which the higher price tickets, the other one being lower price, so 250 versus 450,000. But it goes to show at the higher price point, they would actually have to complete 185 flights to earn 2.7 million per flight. And at the lower price, it's going to be roughly about 1.5 million per flight, but they do have to fly 333 times a year. So again, I think I never really saw this kind of perspective. So I don't know if they actually have the feasible opportunity to do that. Most likely not. So I think that's something that investors need to know, but it's still very, very early stages. That's something that people seem to overly forget, that this whole sector is just like very, very new. So once again, make sure you guys do your own due diligence because as well, I'm not a financial advisor. Generally speaking, though, one thing that's been really circling Virgin is short. So I'll give you a quick update on that. So short score is currently 80, utilization is 100%. As far as what shorts did on Friday, even though it did go up roughly about 7%, they only returned 33 or maybe around 34,000 shares. So not too much. Still relatively high. So 23.32% is the short interest, which is the percentage of the free float. Cost to borrow average is 3.05 and 53.32 million shares is in fact being shorted. So once again, that's something just to be aware of. They're still very much circling. And based on the earnings, there was a lot of analysts that did kind of jump on board. I guess a lot can be taken not necessarily as face value, but it does look like there was roughly around 4 analysts that did give ratings associated to the earnings per se, none of which were good. So you do see, for instance, Bank of America kind of reducing their position or at least reducing their price target down to $4. Canaccord $6. Trust was $3. And it looks like Wolf did kind of remove their price target, but they did leave it as a hold rating. And when it comes to it, though, a lot of these analysts, though, they actually do have some pretty good success ratings. So for instance, right here, Trust or Truist, whatever it is, has 63% success. They have 63%. They have a 33%, so that's not necessarily the best, and 58%. So again, it could very much just trend down. So I'm going to talk on the technicals and various other things as well that might be influencing it potentially this week. Keep in mind, though, this is a fairly new sector. So a lot of these analysts would be very much scared to give a 20, 30 or whatever price target out there. So just be aware of that. If you do like a lot of this information and sentiment or whatever else up here, even as far as analyst forecasts for upcoming earnings, click on the link in the description below or the comments, pop over to Interactive Brokers. They do have a lot of good information. But like I said, when it comes down to this upcoming week, there's a lot of things that might cause a little bit more of a volatile time for this week. And what I mean by that, Powell speaking twice. So we already know that's a little bit more of a Russian roulette. But outside of that, though, there is a lot of kind of data points coming out very much linked to as far as consumers. So starting off on Wednesday, there is ADP non-farm employment. Forecast is currently 195,000. And I think that's one of the biggest things that so far has really held up the economy is the consumers. So if you take that out, then the economy might be crumbling because there's a ton of institutions out there that are just continuously shouting recession, which obviously, as of right now, does not necessarily make that much sense because consumers, based on the data points, have all been out there earning the money, still making money, having their jobs, various things. So if this data point does show signs of crumbling, then this is where a lot more kind of recession talks will come back up. And so again, starting off on Wednesday, Thursday is right here. So initial jobless claims, that's going to be something that a lot of people look at, especially with Powell talking. And then on Friday is going to be non-farm payroll. So once again, another kind of very much linked to consumers. So all of this is going to be really factoring into the market as well. So even though it did go up roughly about 7% on Friday, still it didn't transition into the higher percentile of the Bollinger Band, but it is above a lot of the pivotal moving averages, so the 50 and 100-day moving averages. So generally speaking, it could go either way. I know that kind of sounds gray a little bit, but for instance, looking at stochastic, it is currently at 29, so potentially getting to oversold status. There is no defined trend right now. Momentum number of retail investors over the last couple of days have been getting in, so very much they bought the dip with Virgin. But generally speaking, like I said, if there is a lot of fear out there and a continuation of fear, and especially based on their earnings, they are bleeding through a lot of money, meaning dilution, various other things. So investors don't necessarily want to hear that at this stage in the game, especially if you do couple that with, for instance, recession talk. So if this data that does come out is very positive, then I anticipate it to actually go to the higher percentile of the Bollinger Band, which of course would kind of cause it to go up very, very high, maybe to kind of this new level right here, so around the 750 range, at least in the short term. If for any reason that data is negative, then I do anticipate it to kind of go back into this range right here. Not new 52-week lows, but around the 4 to 450 range in reality. But once again, let me know your thoughts on all of this in the comments below. If you haven't already, hit that thumbs up and subscribe. I always greatly appreciate that. If you do like my Virgin Galactic content, want to support the channel, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that said, appreciate you guys watching. Hopefully everyone's having an amazing weekend, and let's all make a lot of money on Virgin Galactic.